Hey everybody, we're gonna have a great video today. We're actually speaking with Cynthia Reynoso for Empower Home Loans, and she's here to share with you a little creative financing tip that might just help you into your next home or into your next investment. So, with that being said, Cynthia, do you want to introduce yourself?
Yeah, I'd be happy to. So again, just like Manny said, I'm Cynthia Reynoso. I've been in lending since 2009. I love it. And Manny and I were having a recent conversation that sort of inspired this conversation. And he got really excited about some of the topics that we were discussing and some of the programs that I was sharing about. So he wanted to kind of share with the masses.
Exactly. Thank you so much, Cynthia. And what was I so excited about?
So we were talking about the DSCR loan. Some people call it a cash flow loan, and it is a great tool for investors. So this program is specifically investor only. So this is for individuals who have already a property, a primary residence, and want to, move forward with the next purchase.
Awesome, awesome. So if I'm a renter and I want to do this, no good.
If you're a renter and you already own a home, good. But if lender talk, you can't, gotta specify.
I love it.
But yeah, if you do not currently own a home and you're looking to purchase your first home, this is not a program that's able to be taken advantage of by first-time buyers.
Okay, well, let's just dive a little bit deeper into that. So what are DSCR loans? What are they?
Sure. Well, I think it comes down to the benefits and, really more so what it's not. So it does not require any of the normal qualifying factors. So if you or I just want to purchase an investment property, traditionally, we would need our 20% down payment, but we would also have to income qualify. And that's what holds many, investors or soon-to-be investors, that's what holds people back from that next step. It's sort of tough to qualify for your first investment purchase, especially when you don't already have that history as a landlord. And so your tax returns don't show that additional income. So it can be a little bit tricky because you have to qualify for your primary residence, your mortgage, and you have to qualify for that additional new mortgage. And so how we as lenders do that approval process is, it's federally regulated, and we have to do an income debt calculation, as we call it, a debt to income ratio. So we have to look at what percentage of your income are those debts, including that new proposed mortgage. And for many people, maybe their tax returns don't show a lot of income, or maybe they don't have that landlord history. And so it might be hard for them to qualify under traditional means for a second mortgage, if that makes sense. So the benefit of the DSCR loan is that an individual does not have to income qualify. There's no income in the file whatsoever. This loan is qualifying the property more so than the buyer. So the property has to qualify on its ability to cover that proposed mortgage payment. Does that make sense? No, that's a lot.
No, it definitely makes sense. So on that same thread there, how many units can I buy? Is it just for single family? Is it duplexes, triplexes, fourplexes, or can I go into beyond multifamily and into kind of up to like 10 units? What are your thoughts on that?
Yeah, it really depends, but there are programs that even go all the way to like if you want to do a condotel using a DSCR, it's available. So more so, you're going to get better pricing. You're going to get more of like a normalized product with more streamlined, lower pricing at the 4 units or below. Past that, in lending, we really consider that a commercial purchase, and the game sort of changes with respect to how much money you have to have on reserve. And there's a few more hoops to jump through. But if you're looking to just purchase that next single family or duplex, triplex, fourplex, that sort of thing, then it's business as usual, no problem. The only thing you need to qualify for this loan if you're looking at one of those purchases, 20% down, you have to already own a home, you have to have a 620 or higher FICO, not hard to do, and if you're not there, I can get you there. And that's it. The property has to show that the rent will cover a portion of the mortgage. Notice, the rent doesn't even have to cover that whole mortgage payment. So sometimes when you're getting started, you see the investment opportunity, and maybe at first that rent is not going to cover that whole mortgage, right?
Yeah.
But you know what you're getting into, and you're thinking, hey, I can invest and maybe just come out of pocket this much. That works for my budget. That's something I can decide for myself. And this program allows for that. Get started if you're an investor now.
That is awesome. So do all lenders have the same guidelines for this program, or is it different if I go to somebody else besides you? Because again, we're only going to go to you, Cynthia, but if we went to somebody else, are they going to have different guidelines? Is it going to be a different program?
It's a little bit tricky. So really what you're doing in this program is more widespread. Now it's a lot more available and different people are messing with it. But I would say it's really about the individual that is going to be completing that loan. It's about the knowledge base at the end of the day, because these can be a little bit tricky if you're going to get into, more of the hairy files, right? If you're going to try to compound things, and if you're really going to set up a structure for investing, you want to make sure that you're going to someone who is personal. So of course, with these products, I really don't recommend doing like online lending or, Google lending. You need someone that you can speak with, someone that's really going to be really working on a personal investment portfolio for you, talking about setting you up for the future and providing proper advisement. So I would say even more important than the program per se, many people have this program now, but I would say definitely mess with someone on it who has the, professional advisement and the care that they're going to provide you.
Awesome. I couldn't agree more. Work with professionals, right? Work with people that know what they're doing. And on that
Personal,
note, Cynthia, how long have you been doing this? How long have you been with, in the lending field?
I got in 2009. I actually got my start in the back side of things on the secondary market. So placing loans, kind of the shadow lending. Nobody really understands or sees that part, which was the best start because it really allowed me to have a serviceable knowledge of the front side of lending. And so, some people start at the sales side because they're salespeople and they fall into it. And I didn't have that start. And I feel like it really set me up in the best way with really file knowledge. And that's what people need.
Well, I got to tell you, just from my experience with working with you, I will tell you that yes, she has great file knowledge, and she's definitely able to pull a rabbit out of the hat. So we do appreciate you for that. Now, what is the minimum?
We call that the loan Tetris, Manny. I love loan Tetris.
And I love Tetris. Yeah. So it's great. I love that. We're figuring it out. Going to make it work, right? Get the next line going down. I love it.
Got to.
So is there a minimum loan amount for the DSCR loan?
There is. It's normally right around, and it also has to do with the cost, because the cost of the loan has to be a certain ratio measurement. So it's usually right around 100,000 loan amount, not purchase price. But that's not, that's not hard.
And what about the condition of the property? What can the condition of the property be like? Does it have to be move-in ready, or can it be a fixer-upper? Or, and if we say fixer-upper, how far of a fixer-upper can we make it?
Yeah, I know. I have to be careful with a realtor. You people, you say fixer upper, and it's like, just fix.
Yeah, I was going to say.
Just need some love, need some TLC. Charming. Exactly. All the possibilities. You people.
Put some virtual staging in their photos for you. Yeah. We've all seen those photos. Yes.
Guilty. So guilty. If you're wanting to move into that direction, there are products for that. This is not it. So there are fix and flip products actually now, again, more readily available. So if someone was wanting to do like a fix and flip property, they used to have to go to like hard money lender, right? And you get what you get. But now there are fix and flip products that actually even provide the financing for the rehab. So that's we'll talk about that on a different day. That's a different talk show. But this is not that. So the property does have to be ready to rent because the property is the only leverage. So you want to keep in mind that this is being qualified based on the property's ability to debt service. So the property has to be in a rentable condition on that appraisal report in order to demonstrate that the property is going to cover that mortgage, because there is no other leverage. We're not income qualifying. We're not really diving into credit, although FICO matters.
Right. So you are going to be pulling my credit, but when it comes to my income, we're not really looking at that because it's how much rent that the property is going to produce
Right.
that's going to actually qualify for this loan, correct?
And not only not really looking at it, but not looking at it at all. It is not a factor. We are not invited to put that in the file. If you put income in the file, it's canceled.
Oh, wow.
No
Okay.
income. Absolutely no income in the file, like none.
Okay, so a minimum again, 620, right?
Yeah.
Got it. Okay. So is there a maximum to how many of these DSCR loans that I can have? Or, can
Not
I just use
necessarily.
it once, or that's it?
No, nope, there's not a limit. So there are different lenders that have different limits as far as how many properties you can have financed. And once you get out past 10 properties, it's doable for sure. But then there are, again, other hoops to jump through. So you're going to have additional reserves. You're going to be limited as far as which bank will take it. So the pricing might not be the best once you get out past 10.
Right. Okay. So, but it's still doable, right? And when you're
Absolutely
at 10, the
doable.
idea is that
Yep.
we're able to accomplish those other goals as we step up the game,
And
right?
it's important to note that that is in reference to transactions, to whole mortgages, not in reference to doors. So if somebody purchases a threeplex, that does not count as three. Oh, you took up three. That's one mortgage on 3 doors.
Got it. Okay. So does the property need to be leased already when we're doing
Nope.
this, or, and how are you guys figuring out what the current local rent is? What process are you using? Are you going by off what the realtor says, or are you looking online to Zillow? What are we doing?
Not Zillow.
Of course not.
Love them so much. But no, we're not checking Zillow. How dare you? What we're doing is there is something called a rent schedule that an appraiser completes. So we order a full appraisal report. So essentially what the file is made up of, it's made up of an application with your basic information, right? Your address, who you are. It has a credit report, and it has an appraisal report and a bank statement. Those are the only things in the loan file, in our file to close. So what we do is when we order that appraisal report, what the appraiser is going to do is they're going to ensure, number one, that the home is worth what you're paying, right? Just like every traditional appraisal. They're going to ensure that there are no major health or safety hazards. They're not nitpicking. They're not really looking under the hood. They're not really permitted to for this loan program. What they are looking at is they are specifically ensuring that there are no major health or safety hazards. And they're providing what's called a rent schedule. So with a rent schedule, what an appraiser does is they provide documentation as far as what rent in the area is going for and what this property would specifically rent for. Now, I will say that there are cases where you can appeal the rent schedule and overcome the rent schedule with use of like a lease agreement, a copy of the deposit from the renter. And I have done that, overcome an inaccurate rent schedule with use of documentation. And we can personally guide the buyer through how to do that if necessary.
Okay. Is there any reason why one of these rental properties might be ineligible for the DSCR loan?
Yeah, I mean, there are times where if the rent doesn't make sense, there are times if someone's trying to make something happen that's not going to happen. But for the most part, if it is accurately being used and is going to accurately be rented out and there's not like gray area funny business happening, it shows up on paper. I mean, the paper always tells the true story. And that's what we say in lending, and it's true. The paper always tells the true story. So if it comes out on paper as ineligible math-wise, then it sort of is what it is. I haven't seen that happen. There are lenders that actually go down to 75%, meaning as long as the proposed rent covers 75% of that proposed mortgage, you're good to go. So it's really hard to not make that happen. It's really hard to not make that happen.
And it sounds like you already gone through some of those things, so you already know what hoops to jump through and how to jump through them. Am I right?
Yeah, you know what? It's so important as a lender to know where the line is. And I think that's why staying really heavily educated is the most important thing. Lenders that aren't educated on these programs or don't make a habit of reading guidelines, they tend to sort of play safe because you're trying to keep a deal together, right? But if we take the time to understand where the line is, we live on that line.
I love that.
Confidently live on that line.
Yes,
I know where that line is.
Limit, right?
We know where the limit is, and so we roll up right to it, and no one
Right.
can say anything about that.
Let's use all the space that we've been allowed to play in, right?
Let's use all the space. Yes.
Love it, love it. So could you maybe break down a scenario of maybe, how this would go? Like maybe from the moment where someone's talking to me as a realtor, I've communicated that, hey, I have this great lender, Cynthia Reynoso with Empower Home Loans. What's going to happen from there?
So if someone were interested, I mean, it would be just how you and I do it. We start the conversation, maybe start a group text thread to say, hey, this is my lender, Cynthia. She's going to get you some of the info. Very casual, right? And then I just start the conversation with the buyer to say, what's your situation? And for example, if they're saying, we have our house, we've thought about having a rental property. It's something I'd be interested in. I've always wanted to do this. I just don't know where to start, or I don't have all the money. So we essentially do an approval process to say, okay, this is need. These are the numbers. This is what it would look like this is what a payment looks like. This is what you're required to have in your bank. What do you have in your investments? What do you have in your 401k? Do you have 457? What are we looking at? Where's all the money, right? Stock accounts, whatever it is. And we just talk about it, and I'm able to provide that advisement, and we can kind of go from there and do math. Is really what it comes down to. Is this program right for me? Does this work for me? There is no sense in someone wasting time thinking about it. If you have felt an interest as a buyer in becoming a landlord, then we should talk about it. And maybe you do it now, maybe you do it 2 years from now, but you have to seek the information, right? And for some people, the thought of being a landlord is nauseating. That is not their dream. They're not interested. It's a big no thank you, right? Maybe they don't have the risk tolerance, the patience, the desire, the dream. They can't, don't care about real estate, can't relate, but they're out there. And I've talked to people about this, like, well, do you have an interest in being a landlord? And it's like, no, I would hate that. Like, cool, then let's not do that. Let's not do it, right? But if someone in their heart says, this is something that I've always been interested in and thought like, wow, could I ever do that? Like, let's set a plan. If you don't set a plan, you're not going to magically arrive at your goal. That's not a thing. There aren't books written about that. There are books written about systems that you put in place, right, to meet your goals. So let's put the system in place. Let's talk about the goal. And if it takes you 5 years, if it takes you 10 years, you need to have the facts. How much do you need to save? Don't tell me, oh, I just need to save. Tell me the number. How much?
What is the goal, so I can set up my smaller, my stepping stones to the larger goal, right?
That's exactly right. And I think people really count themselves out. They pre-qualify themselves, which is my pet peeve. And they do the math for themselves based on, not on facts. At the end of the day, when I say like, okay, well, where did you come up with that number of the money that you want to have saved? And they're like, well, I just thought I have to have that. Somebody.
Right. And that could be good and bad, right? But it could be good because you've saved more than enough that you needed, or the bad is you haven't saved enough and you could have, but you didn't have.
Wasting time, saving more than you needed is bad. It's bad. There is nothing more heartbreaking than someone wasting time by trying to save money they don't need to save. Grr. Can't win the game if you're not playing, if you're on the bench.
I love that. And I know that you share my same goal as helping others create that generational wealth. And This is one of those tools that is definitely out there to help do that, right? And and I know that we're going to have future discussions where we're going to talk about other ways that we can help people, create generational wealth. But this is definitely one of those great stepping stones if you already own a property.
Yep.
And again, I mean, when you first told me about this program, I was wondering why, it was just why wasn't it more known? Why wasn't it more shared?
I don't know. And you know what? When I've spoken with people about it, even lenders, that aren't familiar with it, I think that there's this perception that it can't be that easy. But it is. The only thing in the file is a bank statement, credit report, and an appraisal. That's all that's in the file.
So then what's the timeline for, getting the offer accepted? When are we closing? Is it going to be 30, 45 days, 50 days?
2 to 3 weeks. No, 2 to 3 weeks. You need an appraisal report. That's it. That's literally all you need, is you need an appraisal report. That's it. Sometimes we can get those done in a week.
I love it. And I'm just blown away by how.
I love this program. It is so good for self-employed people who maybe don't want to, maybe they're still working on their tax returns, or people that have had some self-employment. You switch from LLC, S Corp, you move it around, incorporate, And so maybe you aren't eligible for traditional financing, but that shouldn't hold you back from taking advantage of this current market. This program also, I have to note, it is available for our IPIN buyers, which you know are very close to my heart.
Ooh.
It is also available for foreign nationals. So if there is a realtor that is messing in that arena and helping some of our foreign nationals that do invest here, this is available for foreign nationals can do a DSCR loan.
Are the terms going to be a little different for those type of individuals, the ITIN and the foreign nationals?
Not incredibly. Nope. No, the playing field is pretty even on that.
Wow. So I'm thinking, would this be a good option for those individuals that decided to take, 'cause I know that in the last couple of years, the last decade really, a lot of people have been offered early retirement and they've taken it. So now they're not on that huge income they used to make all the time, more living off of savings, Social Security, and kind of other investments they made. Would this be a great tool for them to take their primary property and then going out and using the DSCR loans to acquire more property so that they can grow that wealth even into after retirement? This is an option?
Yes, it is it's such an important conversation to have with respect to just the data mathematically. What are the percentages on rent right now nationally, but also in our beautiful state of California? Let's not talk about what is happening with rent. Who is making the money? Landlords.
Mm-hmm.
Landlords are making the money. Everyone can complain about it. Can't beat them, join them, y'all.
Yeah.
What are
Well,
you
I
doing?
say one way or the other, you're paying a mortgage, whether it's yours or somebody else's.
Oh, it's
right?
true. It's true. Everyone's paying a mortgage. The other thing to consider is we also, with regard to data, we have historically high levels of equity. So we have these retirees who, also let's look at the data. The life expectancy and also the quality of life has really extended. So you have a set of retirees who are, very healthy and mobile and active and interested and kind of ready for that next phase, who have this, God bless them, bought homes at the right time, have this giant chunk of equity. Culturally, at that time, it's more, you get the house, you stay in that house, right? Which is definitely not the case now. But you have this large section of our population that has historic high levels of equity. So you could let that equity just sit there doing nothing, or you can do a cash out refi and use those funds to purchase an investment property. It requires 20% down. So how many little chunks of 20% can we get out of your home equity to kind of maximize? That is something to look at. Absolutely. And with the availability of property management and all the regulations now with property management, it is so safe and cost effective to go buy the property, hand it over to a property manager, and get your mailbox money.
I love that mailbox money. So let's just say, I love the investment that I purchased. Can I move into my investment property?
Yep.
Yeah. Is there any time frame I have to wait before I move into that property, or?
Not necessarily. So when you sign your loan documents, the deed will state that it is your intention that this property will be used for this intended purpose for the next 12 months. And that's true if you buy a primary residence. It is my intended purpose that this property will be used as my primary residence for the next 12 months. If 8 months from now you get a job transfer, or you have, a military requirement or anything like that, and you have to move and you put a renter in there, that's absolutely acceptable. It's in reference to intention. So if you intend to use this as a rental property and 8 months from now you unload your house, move into that one because your circumstances have changed, absolutely, that's fine.
I love that. That's a very great and clear answer on that one. I can't think of any more questions that I can think of to ask because I'm just really ready to run out and go find people to use this loan. So
you're gonna see it is this easy. Like, it's so annoying. It's this easy. It's not it. Like, full credit, put the down payment.
Well, I'm thinking for my own parents who are retired, but they're still very sharp. They're still there, and they still want to do things, and they own multiple properties. So why, including their own primary property? So why not help them get another investment, and then maybe another in a couple of years, and keep doing that? Because again, at the end of the day, in my family, it's all about generational wealth, keeping it in the family. So,
and historically, this program has had higher interest rates relative to conventional or traditional financing. But now with where current interest rates are, how do we say this without saying it? With where interest rates are currently, trying to not hurt my own feelings, in the traditional housing market, this, and with the regulations and the changes that have happened with these exciting, like the non-QM space, you saw it, or non-qualified mortgage, the DSCR program, the rate has come down on those. So you've really seen a shift. You can get on that investment property for a DSCR, no income, no qualification loan, you're looking at rates in the 7s.
Wow. And I just want to remind everybody
where they're at for like traditional financing, you're in the 7s.
Right. And I just want to remind everybody too that, 7%, 6.5%, 7%, that's still traditionally, historically, that is the average interest rate, right? So it's not like we're super high at 10 or 11%. Hopefully not yet, when we're not going to be there. But, these are actually not horrible interest rates. They're just higher than what we've been used to the last couple of years. We've been very spoiled with low interest rates.
Well, and people do get sort of caught on that because it's not necessarily that rates shifted higher. Everyone in this industry, we all knew that was going to happen. We knew it was going to happen. The, exponential, just breakneck trajectory at which it happened, that made headlines. So the speed at which it happened, that was the issue, not necessarily the fact that it happened. We all knew where rates were going, and this is not any surprise to us. And if we see them dip next year during the election cycle, we might see a little drop. But I mean, the 3s, the 4s, that was artificial. We knew that. That was a manipulation of the market, which we needed. We all took advantage of. It was great. Rode that wave, right?
Right.
But that's definitely, those market conditions are not returning. So it wouldn't be reasonable to expect those rates to return. But the other thing to keep in mind is, let's say that I'm completely wrong, which ask my husband never happens, hasn't happened yet.
Of course not.
If rates were to plummet, right, in 3 years from now, let's say, you as a homeowner, you're in the game. You have access to the lowest rate available. You will always have the lowest rate available. So an interest rate should never be a conversation. Mortgage interest is tax deductible. So a little bit, who cares? You as an investor understand that it's a line item on your tax return. You chuck it in there and you get that money back. Who cares? Now, if rates do drop, then you drop your rate with a refinance, which I know. And this program can be used as a refinance. So those kids out there with a property that is paid off, or with an investment property that has equity, you can use a DSCR loan to do a cash out refi and go buy more.
Wow. So why don't you give us, how can we reach you? I think we should add your information at the bottom of the screen here. We're going to go ahead and do that for you. Definitely. But I've been loving everything you're saying. And I think we're going to have to schedule another conversation to talk about the other loan opportunities, or other loan options out there, to see how else we can help more people get into more homes and more into investing as well. Because again, we all know that 90% of anybody who's wealthy, it's real estate in their portfolio.
Real estate, right.
And
they weren't trying to time the market. They were just diving in headfirst, making money.
And what happens when people try to time the market, Cynthia?
Oh man, they lose. They're on the bench. You stay on the bench.
Right. So if I'm financially able and capable of doing it today, should I buy today?
Yeah. That's when you buy.
And with the historically low interest inventory that we have here in California, Southern California particularly, when the rates drop, what do you think is going to happen to prices?
Right, supply and demand. Everyone, remember that. Think way back. Supply and demand. I mean, if you don't feel comfortable in that knowledge, talk to somebody who knows, or give it a quick Google. What happens when the supply is low and the demand is high? Prices go up. That's science.
I love it. That's science. And I think we're going to leave it there, and we're going to continue some other conversation in the future. But Cynthia, I really want to thank you for giving us a few minutes of your time today and really sharing with us about how we can grow our portfolios, grow our investment opportunities, and basically, as a realtor myself, help others achieve that goal, a goal of a generational wealth. Because again, that's what I really want to do. I want to help those individuals who want to grow, because my own personal story, my family is a result of that. And I couldn't be prouder to say that even though it was tough at the time, in the long run of things, we couldn't be happier with what things are going on. So, Cynthia, thank you so much for your time. Is there anything else you want to share with us?
No, thank you so much. I love our chat, Manny. To be continued. I'm ready for the next one.
All right, awesome. Well, thank you, Cynthia. You have a blessed day.
Okay.
Adios.